Good morning, everybody. It is it's 7:31. 1 minute off. 7:31 on this Thursday, the 10th day of May, 2018. And let's go ahead and take a little quick rundown of our markets. Actually, we just had some news pop out here just a little bit ago. Excuse me. I can get this. Trying to get my WhatsApp app to pull up on the PC here so I can. There we go. Very nice. All right. Okay. All sorts of weird. Geez, even TradingView was getting a little bit of a hiccup here. Okay. We just had CPI came out, earnings, initial jobless claims, all that jazz. Normal Thursday news activity. I wanted to start the stream right away because you can see where price got halted. I wanted to use this as another example of the importance of market geometry and how powerful Gann's angles are in our price action, and see that we can see that is right where price decided to halt. Now, looking forward at some other types and forms of analysis while we're waiting for the markets to cool off and kind of decide which direction they're going to go, because we always see these kind of moves happen, and they're generally, often they'll revert back down to their mean. There's never really a strong, real big change in direction that we're going to anyways. Okay, let's take a look at where am I at? I was going to pull it up. I wanted to take a look at a different form of analysis while we're waiting for everything to kind of smooth out here, and then we'll get to our trades. If you get the opportunity, I know we use TradingView most of the time, I really suggest that you give a try to Optima by Market Analyst. They have a free trial. This is definitely one of the more expensive chart pieces of charting software out there. But if you are a Forex trader, if you like Gann, like I'm a huge Gann fan, this is probably my favorite charting software. Really tied with TradingView, but for different reasons. The reason I love Optima is because it has the most fantastic Gann suite around. And so we're going to go ahead and just kind of look at we'll just do a candlestick chart, and we'll do it of the euro dollar. And you can see that I have Oanda is my broker that I use, and you can get Oanda's data. You can connect Oanda. You can connect your Oanda account here and trade off of it, just like you can on TradingView or just in Oanda as well. So it's very, very easy to do. But really not wanting to get into a whole bunch of details about Oanda, and really just want to kind of target and address the strength of Gann's style of analysis outside of angles and involving financial astrology. And financial astrology is kind of a silly name, because certainly people dismiss it because the name astrology is in it. I certainly did that as well. But I wish they would come up with a different name for it, because financial astrology is actually it's mathematical psychology based on astronomy. So, and astronomy is a science. And one of the big things that Gann talked about, besides specific dates or aspects in the planets, he had something called he applied he took the longitudinal position of the planet. So this right here is a diagram of where the planets are currently. All right, and they have their latitude and longitude here. Gann transposed and created a calculation to put the longitude coordinates onto a price chart. And one of the nice, and you can do this on your own, but one of the nice things about the software is that it will do it for you. So if we have a new chart here, we're looking at the euro, and this is a, you know what, maybe I'll make it less confusing if you're wondering about these charts. This chart's set up with swing relations, these candlesticks, and so red means that the bar closed lower than the previous, green means it closed higher, blue is an outside bar, and then black is an inside bar. Those are just, I like to see those things when I trade, but they're not necessary, so why don't we just change it back to normal? There we go. Now, when we look at the charts that I usually do, right here, all of these angles and this entire construction is based off Gann's law of vibration, and then just applying the equidistant time cycles, and then applying the square to the center and fanning it out. That's how this is something that I've constructed. I don't, this is kind of my own application of Gann, and it's the proper application of Gann's theory and his market geometry, but I've amended it and while not breaking any rules. I really don't have another way to describe it, but I have found it to be an extremely effective and useful form of charting for me, and it's fairly new, and I'm actually in the works of contacting some folks in the technical analysis field to have them look at this and see if we can't get a type of, well, whatever. Anyways, but this is based on a total natural. This is the law of vibration, the 192 count, and we're looking at a natural harmonic zones of price, and so everything here is natural. It's not based on subjective areas of support and resistance. None of this is dynamic. These are all static values that will remain here forever. It is based solely on the idea that markets are natural and that there is a rhythm and an order to them, and that's what this represents. Now, zooming back over to here, we're looking at the euro dollar, and what we're looking for is a natural level of support and resistance that is not based on market geometry alone. So we're looking for something that is within nature, and the most relevant application of that is the geometric coordinates of the planets in our solar system. And so these are called Gann planetary lines, and by default they end up being, this is Mercury, and then you can divide them into harmonics, which is what Gann did. So we could divide them up into we could add just one midline harmonic, and every instrument is sensitive to some particular planetary line or a synodic cycle. If we were to turn this into Jupiter and scroll out, and then if we were to add a full 8 harmonics, which is what the rule is, If we do a level of 8 harmonics and look at the past price action, we can see that there is a strong influence of this type of activity. Now it looks really, you put enough lines on here, it certainly is going to look like, well, yeah, you get enough lines on a screen, they're going to look like natural support and resistance. But I think a more clear definition of this is done using the synodic lines. And that's taking the combination of two planets. And so if we still do, let's do 4 harmonics. And we'll do the planets of Jupiter and maybe Saturn or Uranus. I think Jupiter, yeah, Jupiter and Saturn seem to be more relevant. And if we did just even 2 harmonics, or 8. Yeah. We can see very clearly that this particular wave cycle, the synodic cycle, is very sensitive. It's very sensitive to the euro dollar. Now, if you just look to see how these are natural support and resistance zones, they're not flat, okay? They're not horizontal. And that's one of the errors, and not one of the errors, it's one of the problems with it's called terrestrial angles, is that they often do not reflect very accurately the shifting natural motion of these levels. And so the only way that you can get a natural level of support and resistance is by using software that will do this, or to draw it out yourself. Bitcoin, this is Bitcoin's chart. All right, now Bitcoin is very, very sensitive to the Mars planetary line. All right, it is very, very tight and very orderly how Bitcoin trades off of the line of Mars. But there's also it's also very sensitive to the synodic cycle of Mars and Uranus. All right, Mars is a very, very it's a trigger planet. It's actually the key to timing, is what Gann called it. So Mars is very important in financial markets, especially in currencies, it seems. But if we're looking at the euro, we see this type of activity here, and we can trade off of it very easily, especially if we use an oscillator. I like the composite index. And we can see that we have fallen through this zone. The other nice thing about this is that I want to show you the square of 9. Now the square of 9, Gann had a number of these types of square root calculators. There's square of 9, or the wheel, or this was called the universal clock. So I had a hexagon version of it. There's also like a square of 4, but the square of 9 is probably his most known for. And the square of 9 is a forecasting tool where you can take a date at a particular date at a particular angle and find a price level, and when time and price are squared, that's where you see major changes in price. You'll see changes in trends. Changes in trends do happen off of these responsive angles. And so instead of, I know I've gone in past videos, earlier videos, I've gone over how to calculate converting a price on a chart onto a square of 9, so you can determine, well, what is the date that a price may get to what is the price level price may go to at a particular date, we can make it easy with this kind of software by just applying the static square of 9 to Gann. Static square of 9, and we can just go off of a low or a high. It really doesn't matter because the values never change. You can put it in the middle of the chart too if you wanted to. And so here is our square of 9 levels. And you know, for the most part, they do kind of end up relating to one of these lines as they happen. And the square of 9, again, that is also a naturally occurring support and resistance zone. These are naturally occurring levels that do not change. These will always be the values. And so it's not a surprise when we were discussing the euro trade, even at the beginning of the year, that we were expecting a type of reversal from this area because it was a 360 degree level. 360 degrees is often a reversal zone. So is 180. And we can look, as far back as we really want to go. And we can see, get rid of this line actually. We can see that the square of 9's values are extremely effective and extremely accurate for identifying where markets may turn. You can make a lot of money just trading off of the initial approaches and breakouts of these zones. All right, if we're looking at it on a daily chart, and we see that prices are moving away or towards an area, we can use an oscillator to determine whether or not prices may reverse from that area. Certainly, if we're in a very extended conditions like right here, and then prices trading here, well, this is screaming that this is a buy opportunity, and so it's not uncommon at all to see, okay, well, then we are probably going to want to buy this area. And that is exactly what panned out. The rejection of this level was well known because we were on this harmonic and we were very elevated in our oscillator. It's a very, very effective way to trade. Additionally, the square of 9 doesn't have just the price level, but dates have a particular level and angle as well. All right. So if we observe how price responds to the dates themselves, we can see a high level of activity around these dates. So about a week after this activity, this square of price and time, we saw a rejection lower. All right, there was a square of price and time here, and prices increased. If we look at, let's see, looking for more correlation here. Square of price and time, but we weren't trading at that range. When you observe price trading near a squared zone of price and time, you will see dramatic changes in the movement of a market. This is looking at the Aussie dollar right now, actually. This is with bar charts and the Gann swing overlay. We're looking at bullish divergence. And look at the Aussie dollar. Look at where price has kind of stopped and it's formed a pivot here on the daily. We have regular bullish divergence, and we've banked off the 360 degree value area. So this is indicating that we have a high probability of more than likely maybe retesting the 90 degree level. But that is just one example and one way to look at and analyze these markets. And I think it's the most natural way to trade these markets is by applying natural harmonic values to your charts. And so right here, we're looking at the pound dollar. You know, if you remember when we were calling the short on this a few weeks ago, the ideas on TradingView, but the reason for the trade was based off of the analysis in the software and on TradingView. But you know, we were at a 90-degree zone where we found rejection, and then when we fell through this 360-degree area, that was a good signal that we were gonna fall much lower, and we are currently trading below the Uranus Pluto lines are very sensitive to the pound dollar. We're currently trading below that, and we have a lot of selling tails here, and we're sitting on a 270-degree square of 9 value, and we need to be very careful of what happens if price were to drop and hold below this zone. But going on here, taking a look at our markets, let's go ahead and review. We have the dollar yen stopped right here on a buy, and you know, on a day like today, I don't think we're going to be issuing any trades today unless we're in trades already. Really not entertaining probably entering any trades today because we are coming off of some extremely, you know, overbought, oversold conditions that may just be pausing for continued move. Certainly, you know, we're looking, if we're observing the behavior here of the price in these angles, we're just forming some type of bullish pennant, which means we'll more than likely break out higher because the trend is up. But again, on the long-term time frame, we are very overdone, and we could expect a deep pullback. We just really have to be careful of that and watch out for that. The euro dollar trading up here has found some resistance up against this arc. This is the kind of zone that we were looking to go short at, so it's probably not a bad area to consider going short at the moment. The euro pound, gosh, this thing just like moves all over the place. It's just all over. Pound dollar had some ugly news release earlier today, and it's still you know, struggling to stay above. We're either forming a nice base here, or we're forming a base for a bounce, or we are just going to continue to drop lower. That is actually the more probable scenario, is that the pound dollar will continue to fall and test this and test the 131 handle. You know, if we're going to use like Elliott waves, we have a 1, 2, 3, 4, wherever 4 wants to end here. But then the fifth leg down would certainly be towards the 131 zone. 131 and 132 areas where we'd be looking. US dollar, Canadian dollar, again, little weakness here. This pivot has ended up showing a reversal in price based on this time pivot here. This is what I was discussing. There's a square of time and price, and when that happens, you do see big moves, and that's exactly what we're observing here. The Aussie dollar, US dollar, probably more than likely maybe seeing a bounce where we could retest possibly the 76.56 area. We'll have to see, though. You know, we'll really have to see how much that were to... can't talk. We'll have to really observe how much that will want to play out. We could be looking at and observing a whole great number of bull traps on pairs like this. New Zealand dollar, finding a little bit of a bounce here, but really not showing anything else happening. It's still trading within that value area, so let's keep an eye on that. Really, I mean, there's just a lot of activity and trades and things going on where it's best to sit flat on days like this. And you know, as we go on later in the day today, we'll get more of an idea of how Friday will look. And today I'll certainly be sure to check the portal as we go on today, because if there is a nice trade setup that appears, I will certainly post a trade idea in there. But for the time being, really not observing a whole lot of reason or justification to get into anything right now. If we get some deeper pullback, where if we get a lot of rejection on the current direction of these moves today, just based on the news, then we will more than likely see trades to go short again in the euro, the pound, gold. Gold's actually probably end up being a fantastic short here very shortly, pun intended, at this the 1326 value area would be a very nice zone to look at getting short at again. All right. Other than that, I really don't see. Let's see, euro. Yeah, I might find some resistance up here. You're looking a little top heavy already. We'll have to watch for all these. So, otherwise, yeah. I mean, we have had a really great trading week so far. We've had a great, actual couple months of trading. Just some phenomenal moves that we've gotten a hold of. And if these do end up being counter trend moves where we see prices maybe forming deep pullbacks and 50% retracements, we'll want to trade into those. But certainly because the trend is so strong here, we don't want to get into anything too early on these kind of bounces, because I usually am a big counter trend trader. I love to get into to moves early, like we did in gold, the euro, and the pound. But the move is still early. I mean, we've had over a year of a bull run in the euro dollar. That any counter trend move after this down move is going to be pretty limited, and it's gonna putter out pretty fast. So a retracement to 121.33 would be awesome, but it's got a lot to go through to do that. So we are going to observe a lot of great opportunities to short and go long again in a lot of these trades that we've been observing over the last couple months. All right. Anyways, you guys have a great rest of your trade day, and I will see you all tomorrow. Bye-bye.